Raghuram Rajan sticks to the script, holds key interest rates but sends out a warning on growth, says underlying drivers need to be rekindled, urging the government to stick to the fiscal consolidation roadmap ahead of the budget.
Global jitters rock Dalal Street. The sensex sheds over 300 points and Nifty tumbles below 7,500. Over 270 BSE stocks hit lower circuit.
Oil prices crash as Brent starts to move back towards $30 mark. British Petroleum posts an annual loss of $6.5 billion, its worst in 20 years.
Birla Corp's 5,000 crore rupee deal to buy part of Lafarge India's assets is called off. Birla threatens legal action against Lafarge.
Sahara Subrata Roy gets a step closer to raising the 10,000 crore rupee bail amount, sells the premium Grosvenor House Hotel in London to a Qatar government-owned trust, also seeks the Supreme Court's nod to sell Sahara Star Hotel and the Formula One team.
The crude collapse forces ONGC to send an SOS to the government, seeks a floor price of $4.2 a unit of gas to stay afloat. That's an exclusive.
Volkswagen confirms the CNBC TV 18 report, says the Indian government has given it a clean sheet in the emission case, also unveils its compact sedan, the Ameo, which will be launched later this year.
And a day before the Auto Expo, Royal Enfield launches its newest mean machine, the Himalayan. The 400cc all-terrain bike targets adventure enthusiasts.
Well, it's a small step but a giant leap for equality. The Supreme Court has opened the doors to ensure everyone is equal under the law, irrespective of one's sexual orientation. A 5-judge constitution bench will hear the case against Section 377, which criminalizes homosexuality. Good evening. Thanks very much for joining us on India Business Hour. Hi, Nandara.
Hi, Shri. The big question, of course, being, is India ready to come out of the closet? Let's hope so.
Well, it is high time that we did so, and that story and a lot more coming up for you on the show. But let's kick things off with today's market action. The bears took control in late trade as the markets posted some sharp losses, a very volatile session. Weak global cues also played spoil sport, and the sensex tanked nearly 300 points. The Nifty has now slipped well below the 7,500 mark. Mid-caps were not spared either, as the index lost about 1.5%. About 270 stocks on the Bombay Stock Exchange, hitting the lowest circuit in trade today. And oil continues to remain the major market mover, with prices sinking, or at least continuing to sink. Brent crude is now down over 5% to $32 a barrel. WTI NYMEX also lower by about 4.5%, is now edged back to the $30 mark. Look at this now. BP has posted losses worth $6.5 billion in 2015. That's the worst performance the company has seen in the last 20 years. So it tells you the kind of pain companies like BP are facing on account of falling crude prices, Nandara. But what about the US markets, Nandara?
Red is the color of the day, Shireen. It's a sell-off across global markets. Weak oil prices, poor earnings, certainly spooking sentiment. You have the Dow right now down by 232 points. The S&P 500 down by 1.3% or 25 points in trade. Nasdaq, that's down 48 points or about 1% in trade. And a very similar story playing out in Europe as well. Like I told you, red is the color of the day. We've seen the European markets trade under immense pressure today. The British FTSE down 157 points. The German DAX, that's down 2% at 200 points. And the French CAC down 128 points.
All right, it's time now for the big story of the day. It was a no-action policy from Governor Rajan this time around. As was expected, the repo rate was left unchanged at 6.75%, but the governor has maintained that the central bank remains in an accommodative stance. The rate cut, however, appears contingent on the government doing its bit by keeping the fiscal deficit under control. Lata and Ritu Singh bring you the highlights of the RBI's monetary policy.
Structural reforms in the forthcoming union budget that boost growth while controlling spending will create more room for monetary policy to support growth.
The governor did not cut rates, but has laid the hopes and conditions for the next rate cut, which is that the government must stick to the stated fiscal deficit target. The reason?
The Indian economy is currently being viewed as a beacon of stability because of the steady disinflation, a modest current account deficit, and commitment to fiscal rectitude.
The governor made public for the first time the RBI's growth forecast for FY17. The gross value add is projected at 7.6%, which the governor pleaded is a reasonable number. On inflation, the RBI forecast CPI will remain steady at 5.5% in 2016 and fall to 5% in Jan-March 2017. But this forecast does not factor in the 7th Pay Commission recommendations, giving the feeling that there are upside risks to inflation.
The January 2016 target of 6% should be met. Going forward, under the assumption of a normal monsoon and the current level of crude oil prices and exchange rates, inflation is likely to be inertial and around 5% by the end of fiscal 2016-17. However, the implementation of the 7th Central Pay Commission award has not been factored into these projections and will impart upward momentum to this trajectory for a period of 1 to 2 years.
Neither the governor nor his deputies offered any hope of easier liquidity or big bond purchases in their remarks.
I think the liquidity management has been adequate, and we stand ready to do more. In fact, that is likely to happen as we reach nearer the end of the fiscal year.
The governor defended the bank's NPA cleanup, saying that once legacy assets are tackled, banks will be willing to lend to new projects. He announced that rules governing strategic debt restructuring, or SDR, will also be tweaked.
It was, as expected, a non-event policy. But for those who thought that given the huge global deflation, the governor may sound a little more dovish about inflation in India, that hope was scorched. In fact, there was a reference that services inflation in India is not falling, and that throughout this year, calendar 2016, inflation will remain at 5.5% and probably at best fall to 5%, not counting the 7th Pay Commission. Counting that, probably it will be higher, which means hopes of too many rate cuts should be scorched. Yes, there may be one, because after all, it remains an accommodative monetary policy stance. In Mumbai, from the Reserve Bank headquarters, Lata Venkatesh with Ritu Singh and Alexander Matthew.
So like we told you, it's a status quo policy, and Lata Venkatesh back on India Business Hour with the editor's take on the policy. Lata, it seems pretty clear that Governor Rajan sending out a stern message calling for fiscal discipline ahead of the union budget.
Well, for me, the first message from the credit policy is that we need to recalibrate growth ambitions. 7.6% is the forecast for next year, and the governor calls it a reasonable rate of growth. The plea is don't try to force it up with a high fiscal spend and a high fiscal deficit. In fact, even the customary reference that there should be high public spending so that private investment crowds in is absent from this policy. The plea is fiscal rectitude first and public investment to the extent possible. The second message is that the war over inflation is not over. For all of 2016, inflation is going to stay at 5.5%. And even last year, in spite of the best circumstances of crashing commodity prices, services inflation stood at 5.5% for the better part. Therefore, don't expect a flood of rate cuts. At best, one more.
All right, Lata, thanks very much. That's Lata's take on the credit policy and what to make of the road ahead. But here's the big CNBC TV 18 exclusive. Uday Kotak believes the Reserve Bank has done the right thing by keeping rates unchanged in its monetary policy. Speaking with CNBC TV 18's Ritu Singh, Kotak says the central bank is right in keeping a close watch on the government's fiscal policy.
I think today's monetary policy was completely on expected lines. The governor has and the RBI have made it clear over last few quarters, in fact, saying that they would obviously look at, number one, signals on inflation, and number two, more importantly, fiscal policy, which is expected very shortly.
Was it a bit of a disappointment that RBI did not announce measures to ease liquidity in the system? Do you think there was a strong case for that?
See, I think you've got to know that probably government will increase spending between February and March. So some of it may be coming out of surplus government balances. So as they get spent, you get money back in the system. But I have been in the financial sector for the last 35 years. And if there's one thing I know, February, March and early April are always tight periods of the year. And I do believe that interest rates will get more soft sometime after middle or end of April.
Uday Kota giving a thumbs up to today's monetary policy. But you know what? Today's policy wasn't just about interest rates and inflation. The governor's promised to create an enabling framework for startups in the country. What does it mean? A special report coming up in just a bit, so stay tuned right here.
But here's a big corporate story. Less than a month after JSW, actually it's not even a month, less than a week after JSW Group's top boss Sajjan Jindal told CNBC TV 18 that he's in talks with Lafarge to buy the entire cement business in India. The country's largest cement maker, Birla Cement, has informed exchanges that it's evaluating the option of taking legal action against Lafarge India Private Limited for backtracking on a deal to sell 2 of its cement plants in India. Now, this 5,000 crore rupee deal had been agreed upon way back in August of 2015. But let's hear out exactly what Sajjan Jindal had to say to Menika and Davos in January this year on the possibility of picking up Lafarge's India business.
We are looking at various opportunities. We are not yet in any final stage.
Has Lafarge come to you?
Lafarge is also one of the targets that we are looking at.
Okay.
But I mean, these are all in the marketplace.
Okay.
So we are looking at those, and but nothing yet has been concluded.
So that's a deal that's come unstuck, a 5,000 crore rupee deal falling through. More than 2 years after the Sahara Group started scouting for a buyer for its iconic London property, the Grosvenor House Hotel, it has finally found one. It is a trust owned by the Qatar government. Ashmit, who was in the courtroom when Sahara made this submission, joins us now with the details. Ashmit, will Subrata Roy walk out of jail? He's been there for almost 2 years now. Given the fact that they're now selling these assets and they found a buyer for the Grosvenor House Hotel, is it time for the Sahara Shri to walk out of Tihar?
Well, will he walk out, and will he walk out in time for the launch of his second book? That's one question I guess he's awaiting an answer to as well. But at this point, given from the claims that they have made before the Apex Court, it does appear that they have finalized the deal as far as the Grosvenor House is concerned. Again, a prime property situated in the heart of London. What we understand, as per their arguments, is that they've sold it to a Qatar government-owned trust. That's as far as their London property is concerned. With respect to their New York properties, they submitted before the Apex Court that with respect to the debt on these New York hotels, they have managed to refinance it with the help of a Russian government-owned bank. What this essentially means is that they will be pocketing a sum of about 2,300 crores, and that this deal is likely to conclude in about a 30 to 40-day window from now. That's part one. The second part, they have moved another application before the Apex Court, and this time to seek the Apex Court's nod to go ahead and to sell 3 key assets. Amongst them, the Sahara Star Hotel is the Sahara Star Hotel in Mumbai. There's also the Formula One team that they have, and 4 aircrafts in their possession. So clearly, they are looking to pocket, as far as this second tranche of transactions is concerned, a sum of 3,000 crores. So clearly, a renewed attempt by Subrata Roy to bail out of Tihar jail as early as possible.
All right, Ashmit, appreciate you joining us with those details. So perhaps it could be the end of the jail term for Subrata Roy. Now, it's been months since German car maker Volkswagen found itself in the eye of a global emissions scandal, and the company says it has received a clean sheet from the Indian government. CNBC TV 18's Shweta Kothari reports that with this, the company is ready to get its muscle back in India. Remember, Shweta broke the story of Volkswagen getting a nod from the Indian government when it came to possible emission violations.
Michael Mayer and his team at Volkswagen India have a good reason to smile. As CNBC TV 18 first reported a month ago, the German car maker, which has been embroiled in an emission scandal of global proportions, has emerged from the investigation by the Automotive Research Agency of India with a clean bill of health.
I mean, we've made our statements in cooperation and collaboration with the government authorities, which have been confirmed also by the Road Transport Ministry, and we were working alongside with that, and our engines comply with the Indian regulations fully, so that we think we have a clean sheet.
So with the ARAI failing to establish that Volkswagen cars in India violated BS4 emission norms by using defeat devices, the government has dropped the case. And the car maker is pushing ahead with new launches to regain any market share it may have lost in the last few months. First off the bat, this all-new compact sedan called the Amio, which will take on firmly established Honda Amaze and Swift Desire.
The car actually stands out with some first-in-segment features like cruise control or rain sensor or an auto-dimming interior mirror. These are small things that add to the comfort and the safety of the customer. And on top, it will certainly be priced attractively, but it will not be the cheapest in its segment, and it will come in the second half of 2016.
With the Amio driving into India, Volkswagen hopes to put the pain of 2015 firmly in the rear-view mirror. It hopes to add distance to this pain by launching 3 more cars through 2016, the Tiguan, the Passat Hybrid and Polo GTI. In New Delhi, Shweta Kothari.
Those are Volkswagen's plans for the year. Now let's talk about Royal Enfield. It has finally unveiled its latest motorcycle. It's called the Himalayan. The company says not a single part has been borrowed from the existing Royal Enfield lineup. The Himalayan is powered by a completely new 411cc single-cylinder engine, making peak torque of 32 Newton meters. And while peak power stands at 24.5 PS, the bike will go on sale in March, and that's when the price and delivery plans will be revealed. The motorcycle is likely to be priced at around 2 lakh rupees ex-showroom. Managing Director and CEO Siddharth Dalal is brimming with optimism on the back of this latest launch.
We're creating a market, so we wanted to nurture nicely and relevantly, so the right people should be getting it for the right reasons. And over time, the market will develop. We're sure about that. 2016 looks great. I mean, we have a good order book. We've got lots in the pipeline. We've got lovely new stores which are all out there. And
how many new can we expect?
Well, actually, what we've done is we've changed the entire identity of all of our stores. So if you go to any store right now, even in a small town in India, it is a totally different experience. It's not a hard sell environment. More than that, it's about relaxed environment that we've created.
Well, that's the Himalayan, courtesy Royal Enfield. And all roads will lead to Noida tomorrow with the 2016 Auto Expo kicking off. So what can we expect? Well, 80 new vehicles will be unveiled at the 5-day event, cutting across segments. It's Tata's latest hatchback or Maruti's latest premium bet, the Vitara, Brezza, to Jaguar's first SUV, the F-Pace. They will all be showcased. And with pollution being one of the biggest talking points in India right now, automakers are also expected to showcase some of their prototypes and e-ideas at the event. From the two-wheeler segment, it's going to be high performance and sports bikes with the likes of Ducati and BMW showcasing their latest offerings in India.
Well, considered as one of the poster boys of Make in India, the South Korean electronics giant LG invests 1,000 crore rupees annually and at any given time has more than 2,500 people working in its 2 factories in the country. The company is now grappling with lower sales thanks to poor monsoons in rural India and falling disposable income in urban centers. In this budget hangout, LG India's top boss tells me how the finance minister can boost consumer spending.
In the run-up to Budget 2016, I decided to find out what can the finance minister announce to help the manufacturers and consumers of consumer electronics. For that, I traveled to LG's factory in Greater Noida. It is from here that the South Korean giant has been producing for 2 decades.
The very complicated tax system, tax policies. Those tax policies should be simplified and transparent.
So when you say they need to be simplified, do you mean that the rate should be cut, or do you mean that they should be done away with?
Not only the reducing the tax rate, but also the implementing those tax the process should be clear to improve, to remove any litigation or dispute. So we have experienced some unnecessary dispute or some litigations.
So are these big litigations, do they involve a large amount?
Not that big, but to be global, standard should be improved.
And you're saying that taxes should be cut. Which taxes should be cut?
Many taxes. In order for the consumers, to improve their purchasing power, consumer income tax should be lowered, and the excise duty rate should be lowered, and dividend tax even 20%. I think it should be removed because already we paid a lot of taxes, but in the final net income should be transparently transferred to other countries.
Are we far more expensive? Is India far more expensive tax-wise compared to other countries? What's the experience like?
Yes, some area, yes, more expensive. For instance, other countries VAT. Here there is no VAT. Now GST is in the process to be implemented soon, but the percentage is still high.
So what has the experience been? Are you finding that the disposable income, the purchasing power of the consumers has been reducing and that is impacting companies like LG?
Absolutely, but not enough.
If you could have lunch with the finance minister and tell him this is the ideal rate for taxation, this is when consumers will come and buy more fridges and more televisions and more microwaves, what would that ideal tax rate be?
It's not tax, but consumers are not rich enough to buy and by paying at once. So they are looking for some credit, the installment payment. In case of installment payment, the financial scheme is required. So now private sectors, consumer financing, it costs high. But if government offer state-run, low-cost financing, consumer financing facilities, it will be really helpful for consumers to buy.
Do you have that in the rest of the world? Have you seen this take off quite successfully, such schemes?
Yeah, some countries like Mexico or Brazil, they once adopted that kind of, government, state-run consumer financing facilities.
A lot of manufacturers, whether it is an LG or a Samsung or you name them, they're all also telling the government, why are you not incentivizing us to manufacture here? People can import from China and it's turning out to be cheaper. Is that part of your budget wish list as well?
Yes, of course. There are many steps of the localization. Some country only, pretending to localize. Some company almost 100% localization. Our goal is making LG 100% localized company. So then government should incentivize.
Well, that's the wish list of the consumer durable segment hanging out with LG. It's back to the central bank's credit policy now. The Reserve Bank is throwing its weight behind the Modi government's Startup India drive. As an aside to the monetary policy review, the governor unveiled plans to relax several regulations which will, among other things, make fundraising easier for entrepreneurs. Alexander Matthew has more.
Startup India! Stand up India!
The Prime Minister's call is being answered not just by various ministries, but by the Reserve Bank of India as well. This response comes in the form of a slew of regulatory relaxations to facilitate the growth of startups.
Some have already been announced, some are underway, some are being discussed with the government. But the broad point is we're sort of supporting the startup process by making it easier to raise money, often from abroad, but also simplify the compliance with regulations, including putting a lot of the forms online so that they really don't have to go from pillar to post.
Apart from the easier fundraising from foreign venture capital funds, the RBI is also considering allowing startups access to rupee loans under the external commercial borrowing framework. Also on the cards is a relaxation to the list of eligible lenders through this route. And in the case of a deferred payment for the purchase of a stake in a startup by an investor, the RBI has also extended the tenor of an escrow account to 18 months. Experts welcome the measures, saying they will do more for the economy than just boost innovation and entrepreneurship.
So I think there will be an increase in funding because the current trend of re-domiciling may come down. Because what has been happening is many companies are re-domiciling overseas. The money is coming overseas and is being sent to India in driblets. Now, if people start operating their accounts in India itself because it's much easier and the regulatory regime is clear, the money will remain in deposit in India, and that will be a very good news.
These measures are just the tip of the iceberg. Governor Rajan says more measures like facilitating the issuance of innovative instruments like convertible notes and streamlining overseas investment operations are under consideration. So the RBI is doing its bit, and it's up to the finance minister to further catalyze the startup drive. In Mumbai, Alexander Matthew.
So that's the RBI's game plan to help out startups. Moving on, do you suffer from a severe case of butterfingers? Have you ever had to walk around with a cracked screen on your smartphone? If your answer to these questions is a blushing yes, then Motorola says it has a solution. The Moto Expo and its unbreakable screen. On tonight's edition of Tech Toys, Megha Vishwanath puts the device to the test.
So Motorola has finally brought the Moto Expo in India, and they call this as the phone that's not afraid to fall. Why? Because this is the first phone in the market that boasts a shatterproof display, which means that you can throw it off a building or back it with a hammer or a brick if that's what's readily available and the urge hits you, but the screen still won't give up on you. So dear Motorola, TechToy says, challenge accepted. Alright, so there is no scratch on the screen. Let's try and work an app. Alright, I just powered up the camera and that works fine as well. I think we need to up our game a little. How about we throw this device from here? Alright, we give up. This is shatterproof. Although I must add that while the screen has not cracked, there are a few minor dents on the frame. But hey, the challenge said shatterproof screen, so I guess that's acceptable. Also, if you snap on a cover, these dents might not appear either. If you're curious to know more about the shatterproof screen, Motorola says that this has 5 protective layers designed to absorb a large amount of shock. The company is so confident about this technology that it is offering a 4-year warranty on the screen. But the phone is more than just an unbreakable exterior. The 5.4-inch Moto X4 packs in a Qualcomm Snapdragon 810 octa-core processor with 3 GB of RAM. It includes a 21-megapixel camera complemented by a 5-megapixel secondary front-facing camera. This is powered by a massive 3630 mAh battery. But here's the hiccup. The screen may be unbreakable, but the phone just might break the bank. The 32GB variant will cost you 49,999 rupees and the 64GB variant will set you back 53,999 rupees. That's all we have for you today on the drop test. I will review the internals and see if the Moto X Force is user-friendly or not, but you will have to wait for the next edition for that. That's all we have for you today. See you next time.
Shatterproof phone. Even if BlackBerry or the iPhone says it's shatterproof, I don't think I would ever have the courage to throw my phone down from...
Accidentally, Shireen, that's what happens to us.